Coming up on Market to Market, dry weather stokes fires in the west, while Tropical Storm Debbie causes widespread flooding in the east. A roundup of new laws aimed at limiting foreign farmland ownership. And commodity market analysis with Sean Hackett next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, August 9th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The stock market is only one economic indicator of the U.S. economy, but recent news has likely given a few stockbrokers some heartburn. 8 years ago this month, the Dow Jones was at 18,000. Friday's close is above 39,000. And late last week through Monday of this week, the U.S. stock market lost 2,100 points. Now, some have blamed the drop on last week's abysmal U.S. jobs report and rising unemployment rate, but the real culprit may be an increase in the prime rate in Japan. Investors dropped trades on what had been a cheap yen until the Bank of Japan promised to keep rates steady if the market remained stable. The doom and gloom at the beginning of the week has given way to a rebound nearly even with last Friday. As Smokey the Bear turns 80, more than 2.3 million acres have burned in wildfires this year. There are 91 large active wildfires burning in the United States, with 8 large fires burning in Colorado, Montana, Nevada, and California. Contrast that with what is now Tropical Storm Debbie that ripped across Florida and several southern states this week and is making its way north. While the rain has reduced drought in some areas, the national picture shows a nearly 4-point increase in dry conditions. Peter Tubbs has more in our weather wrap.
What began as Hurricane Debbie was downgraded to a Category 1 storm as it made landfall in Florida on Monday, delivering winds of 75 miles per hour. The weather system has taken 7 lives since Monday. Sarasota, Florida sustained widespread flooding after receiving 11 inches of rain. Parts of Manatee County saw 21 inches of rain as the system moved through the area. Once downgraded to a tropical storm, Georgia saw as much as 9 inches of rain in a 24-hour period, which caused flooding in low-lying areas. North and South Carolina experienced widespread flooding due to the system, which dropped rain at 1 to 3 inches per hour. Businesses in Bladenboro, North Carolina, saw extensive flooding damage. A middle school in Lucama, North Carolina, sustained damage from a tornado spawned by the storm. Flooding in Florida, Georgia, and the Carolinas will continue to get worse as rainfall works its way downstream. Officials are encouraging those who live in floodplains to continue to evacuate the area. The storm has spent the last few days drenching a good portion of the eastern seaboard with massive amounts of rain. The only bright light from the devastating weather was a reduction in the overall drought picture for the region. The mid-Atlantic states can expect significant rain through the weekend as Debbie crawls to the northeast. The potential for tornadoes remains in the region. In the mountains and out west, fires continue to ignite in the tinder-dry areas from Colorado to California. In the northern part of the Golden State, firefighters battled the reawakened Park Fire, a massive blaze that exploded Monday and grew by as much as 20 square miles in about 12 hours. The Park Fire, California's largest so far this year, has already scorched over 600 square miles. Firefighters were told during the morning briefing to focus on safety and be mindful of extreme fire behavior, including intense and rapidly moving flames. The park fire was allegedly ignited by arson on July 24th outside of Chico and has destroyed 640 structures and damaged 52. From Market to Market, I'm Peter Tubbs.
Long before a Chinese spy balloon floated across sensitive military sites in the U.S., people were asking if investors from other countries should be allowed to own the land under our feet. In the last 3 years, those voices have gotten louder, leading to a rising number of states enacting laws restricting or banning certain countries from owning or leasing land. David Miller has more in our cover story.
Today, we are acting on that law. I'm announcing that Syngenta, a Chinese state-owned agrochemical company, must give up its land holdings in Arkansas.
In April of 2023, Governor Sarah Huckabee Sanders signed a high-profile law that banned, among others, companies in China from owning land in Arkansas. In October of the same year, the Attorney General of Arkansas ordered Northrop King Seeds to divest itself of 160 acres of agricultural land. Northrop King is a subsidiary of Syngenta, which is owned by the Chinese firm ChemChina. This was one of the first actions taken under a wave of new laws sweeping across the country that added restrictions to foreigners' ability to buy or lease farmland. The Arkansas law prohibits certain foreign parties from owning public or private land where more than 50% of the ownership is controlled by a prohibited foreign entity. Violations of the law can result in foreclosure on the property if the land isn't sold to a qualified buyer. There is also no grandfather clause in the law allowing for purchases already made in the state.
Senate Bill 383 passes.
Concern has been growing in many states about foreign ownership of farmland. Prior to 2023, 14 states had laws prohibiting or restricting foreign ownership or investment in private farmland. Officials with the National Agricultural Law Center at the University of Arkansas say the number of states with some kind of limit on foreign ownership is now 24. Dr. Wendong Zhang is an economist and assistant professor at Cornell University.
Right. I think that the political tension definitely is part of the reason why we are seeing a lot more reaction, especially in the state legislatures. Many of the key sponsors, key legislators in their home states, that the Chinese investments actually are quite low.
There are an estimated 1.3 billion acres of privately held agricultural land in the United States. Of that, foreign entities fully or partially own about 43 million acres, according to USDA data. This is 3.4% of all privately held agricultural land and about 2% of all land in the United States. As of 2022, federal records show the largest foreign holder of U.S. property is Canada at 12.8 million acres, which is about 41% of all foreign-owned U.S. land. Next in line is the Netherlands with 4.9 million acres, about 12% of the total. Chinese investors own less than 1% of all foreign-held acreage in the United States, which is a little more than 349,000 acres. The USDA's Farm Service Agency tracks foreign land ownership under the Agricultural Foreign Investment Disclosure Act, or AFIDA. Foreign owners of U.S. land, be it agricultural or otherwise, must declare their purchase within 90 days of signing on the dotted line. Failure to do so could result in a federal fine of up to 25% of the value of the land. However, the applications are reviewed annually, and some critics say it could be up to 2 years before an application is reviewed. North Dakota enacted new legislation on foreign land ownership in 2023. The measure may have been motivated by a 2021 purchase of land near Grand Forks by the China-based Fufang Group. The company wanted to build a corn milling plant on the property. The problem was that construction of the $700 million plant would be taking place within 12 miles of the Grand Forks Air Force Base. The purchase was appealed to AFITA and subsequently reviewed by the Committee on Foreign Investment in the United States. While federal officials concluded they didn't have the authority to rule on the land purchase, in a statement, the committee did say that any construction was a significant threat to national security. The building permit was denied, but the land remains in Fufeng's hands. North Dakota's new law adds to restrictions already in place since 1979 and gives powers to counties and municipalities to prohibit local development by a foreign adversary. The new measure specifically prohibits farmland ownership by China, Russia, Iran, North Korea, and Cuba. Ownership of land by Canadians is allowed. Missouri limits all foreign land ownership to a total of 1% of all arable land in the Show-Me State. Of the 27 million acres available, Chinese companies control almost 43,000 acres, about 1.5% of the total. Iowa, which already had limits on the books since 1980, added tougher restrictions in April of 2024. Governor Kim Reynolds stated at the bill signing, "American soil belongs in American hands." Florida also has a ban on foreign land ownership by countries like China, but there is a grandfather clause for land already purchased. Zhang believes there are potential consequences to these new laws on the U.S. economy. His concern is over foreign investment in renewable energy like wind and solar.
Foreign ownership interest is one coming from the renewable energy companies investing in U.S. agricultural development. And so they're often driven by federal and state level tax incentives. And so whether the restriction on foreign investments could potentially slow down achieving renewable energy targets. So that's one of the things that the state government is also debating.
For Market to Market, I'm David Miller.
Next, the Market to Market report.
Short covering ahead of next Monday's WASDE report, and good weather made for mixed results in the commodity markets. For the week, the nearby wheat contract gained 4 cents and the September corn contract lost a dime. Reduced Chinese demand and optimal weather for this year's crop pushed the soy complex lower. The September soybean contract declined 30 cents, while September meal dropped $22 per ton. December cotton improved 9 cents per hundredweight. Over in the dairy parlor, September Class 3 milk futures fell 35 cents. The livestock market was in the red again this week. October cattle shed 93 cents. September feeders cut 6.55, and the October lean hog contract decreased to 60. In the currency markets, the U.S. dollar index lost 3 ticks. September crude oil improved $3.19 per barrel. COMEX gold fell $1.80 per ounce. And the Goldman Sachs Commodity Index added more than 5 points to settle at 540.50. Joining us now, one of our regular market analysts, Sean Hackett. Hi, Sean.
Hey, Paul. Always my favorite place to be. You know that.
Especially in nice weather like this.
Yeah.
We ordered it just for you.
I appreciate it.
The weather story is much bigger in corn and beans. However, wheat has had a weather story in some parts. But it's Egypt that was the headliner this week for many early on. Can foreign demand help U.S. wheat producers and this market?
I believe that it can. I mean, when we look at the short crop Russia, Ukraine has had, France has had, I mean, a big hole in wheat supplies is out there. We have a large crop. We have supplies to sell, but I do believe that the way you're going to put a bottom in the grain markets, especially the wheat market, is to get that demand side factoring in, and I do believe it's already begun.
Again, supply and demand could be the story and will be a main topic for us this week. But specifically with wheat, let's look at that deferred contract. Again, able to hold a positive rally for the week. Good sign?
It's a very good sign. If you look at the trading pattern of wheat, it's actually showing a very credible bottoming pattern for an extended period of time. It looks to me like the first market that's going to be ready to kind of turn up and confirm a low. Remember, we put the winter wheat crop away. We're about to put the spring wheat crop away. That's usually when you have maximum selling pressure that alleviates, and then we can lock up the rest and have the buyers come get it.
So better days ahead.
I really, really like wheat here. I think that it's a fundamentally solid market, and I think it's going to be a better market later on in the year.
I've heard this question over and over for weeks, and I haven't sat here in a while, so I have to ask Matt in Iowa's question to you, Sean. Are we in the basement, or are we still in a free fall lower when it comes to corn and beans?
We know that typically harvest lows typically occur in corn in the back half of September. For soybeans, the first half of October. Not every year, not every time. We're in the window where we would expect the floor to be seen. My view is, if you look at, and there's a lot of people that are suggesting, for example, that the corn is going back to 3 1/4, because that was the low that we had back in the 2012 to 2020 when we had a lot of corn. My problem with that thinking is this: we printed so much money and spent so much money inflating the monetary system post-COVID. I don't believe that we're going to be able to get ourselves back down to that level. I think we're going to make a higher floor. We can argue it's 375, 390, but remember, 175 used to be the floor before the great financial crisis, and then it became 3. I just don't think apples to apples analysis here is going to work out. I think we're going to make a higher low when it's all said and done.
But does corn start with 3 for the foreseeable future?
I don't believe so. I really believe we have to do like we just did with wheat. You have to get the farmer who hasn't sold to sell and move the grain and create the pressure, blow out the basis, all those things that they're going to do. But once that's been done and we lock up the corn in the bins, remember, Russia, Ukraine down probably 20% year over year, and Brazil corn crop down 15% year over year. Nobody else has a good corn crop. We have a lot to sell. So like wheat, I think we're going to be able to sell a lot of wheat to those that need it.
On the new crop side of things with corn, you were in Indiana. You said things look good. I was in Missouri. I've been in lots of parts of Iowa, Illinois. Things look really good. What's that tell you? Again, we slipped below that 4 this week.
I mean, it's just a question of what is going to be the price that clears the inventory, right? The floor price. I'm thinking 185 plus or minus a bushel is where we're going to eventually wind up with the USDA. If you run those numbers with maybe some lower harvested acres, a little better demand, and maybe some lower old crop, I don't think we get past 2.3 billion bushel carryout for corn for next year. Stocks to usage of around 15% is similar to past oversupplies. I just don't think that we need to do too much more to the downside to clear the inventory.
Is that the same story in soybeans for you?
Soybeans, unfortunately, is different. Even though Brazil had lower yields and a lower crop, they planted so many more acres that their production was not off that much. They also carried more soybeans into this year than we thought they had. So I can't say that I'm excited about what I see for demand for soybeans going forward. The catalyst that I see potentially is there's talk that we might ban imports of palm oil from China. That has been taking a lot of demand away from bean oil. And if that were to get triggered here later in the year, that could create a windfall of demand for bean oil and get those bean crushers higher. I think that's one of the big catalysts fundamentally beyond Brazil weather that we might need to look at because I don't think export demand is going to be it.
On new crop, Arlan Suderman of StoneX tweeted this week that kind of caught my attention. He said, don't focus on the 15% of the crop that's bad. Look at the 85 that's good. He's meaning more corn, but the same can be said about beans. Like I said, lots of good beans. New crop side, what are we going to do with all these beans?
My feeling is that soybeans are going to need to get direction from corn and wheat. That's the fundamentally bullish story outside the U.S. I think you need to get corn and wheat going on a demand-driven move higher, and it will drag soybeans up begrudgingly. The good news for soybeans is that Brazil currently has subsoil moisture in the lowest 2 percentile since 1950. If rains do not materialize during the planting season, their acres are going to be down, and their their development's going to be way off. That could be a weather catalyst. I know that's not, you always want to hear, oh, we got to wait for weather, but it could be a real legitimate weather catalyst for soybeans as we get later on in the year. Right now, La Nina does not look like it's going to form. It's going to stay neutral, and that's bullish for drier weather in key Brazil soybean areas.
We do have a weather question we'll get to in Market Plus that's similar to that, but let's go to the demand side of the ledger that you talked about in wheat and in corn. In beans, does China come through? If it's dry in South America, do you get the sense they're going to be interested in American beans?
If we really get a serious supply problem, I mean, we've never seen subsoil moisture in Brazil like this before. I mean, think about starting March in the United States with the lowest 2 percentile moisture. If we really get to where that crop could be way off, they're going to come and buy soybeans in the United States in a major way. We have to get there first. The other thing that I think is very important is they started printing a lot of money in late July. If you look at a correlation between commodities and money printing in China, there's like an 85% correlation between the two, and it typically impacts those markets they import the most. Wouldn't surprise me that if they keep printing money the way they are, and it looks like they're going to, we could see better demand for things like crude oil, things like cotton, things like soybeans, things they need a lot of. We might find that they buy a lot more from us.
Is that part of the reason cotton had a run up this week?
That plus the flooding in the southeast was really devastating for some of the cotton areas down there. Certainly that combination of both of those, I think, is what drove cotton, and I think cotton, is going to see more of that kind of flooding the further on we get into the hurricane season.
Live cattle anymore is tied to economy overall, and Friday into Monday, Tuesday, we really took a bath here in live cattle. Is there a sense that they still are tied together, and with a rally in the stock market at the end of the week, that is going to be the savior?
Well, we had a big rally today. And I think this was, kind of the market's a little relieved. But any time the cattle market looks and sees the stock market crashing and sees economic numbers crashing for consumers, it's that's going to trip the switch. It did trip the switch. The speculators sold heavily. However, we did not break through important technical support, and we did bounce this week on a Friday close. I don't think that the cattle market's going to get out of hand unless things unravel much more than they already have.
And feeders have been always kind of more tied to the S&P. Does that trend still hold in these recent developments?
No question that trend's going to hold, and we're going to be tied to monetary policy. The Fed has the Jackson Hole meeting is coming up here on August 22nd, where all the smartest financial guys in the world get together and tell you how they're going to save the world. And then we got the Fed meeting in September, where supposedly they're going to start cutting rates. Very important metrics for something like the feeder cattle market that's waiting for that.
But the markets, just like in commodities, there's always this, it's baked in because they expect it. Is some of this trade turning because we expect a rate cut?
Well, we've been expecting a rate cut all year long, and it hasn't happened.
But not like now.
Not like now. Yeah, I mean, now I think the market really believes strongly that it's going to happen. The question is it one and done? Or is this going to be a methodical process of continuing to do so? I believe they're going to be much more accommodative on monetary policy, especially going into the elections. I think they're listening to what Trump is saying about wanting to control the Fed, and I think they might want to do everything they can to make sure things don't fall apart heading into the elections, if that has any sway on how people vote.
Hog market. I was at a hog show today. There was some smiles, but there were also some concerns. Which should they be thinking more of right now?
The hog market's a little different for me. We know we have cheap pork cutout prices. We know people don't want to eat pork. It doesn't as flavorful as it was before. Having said that, I really believe if we're going to get rid of the oversupply in the marketplace, China's pork price is at a one-year high. Their hog price is at a one-year high. We're seeing indications that their pork supply is going to get very tight. And we've seen a couple of export numbers here in the last month that showed some bigger numbers. I think that's going to be the story that eventually takes the hog market off the doldrums and takes it higher. Without that, it's really tough sledding because we can only sell so much to Mexico, and we just have too much domestic demand that we currently have.
I'll have another pork chop on a stick if that helps. I'll take one for the team. Thank you, Sean. Good to see you.
Good, Paul.
All right, appreciate it. We are going to pause this analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of market2market.org. We are getting ready to kick off our 50th season later this month. As part of that celebration, we are taking the MTOM podcast on the road. On August 12 and August 15, you can find us at the Iowa State Fair in Des Moines, Iowa. Check out our Facebook page for more information. Next week, we'll take a look at new regulations that shorten the path for the genetically edited seeds. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.